Should you invest in stocks? Well, this answer seems kind of obvious because, yeah, why not? Why shouldn't you invest in stocks? Because historically, stock market hasn't been generating returns that has been surpassed those of the deposits, bonds, or any other fixed income securities. So yes, if you want to beat inflation and if you want to have long-term capital growth plus dividends, investing in stocks might be really good idea. But here's one crucial aspect here. Should you invest in individual stocks or shouldn't you? Because there's the difference. But because, well, actual stock picking is not that simple and not that straightforward. Because, yes, you might have heard that Nvidia had spectacular runs, Amazon, Tesla, or Apple had spectacular runs. And if you just buy them early, you will make so much money, right? Well, of course, just look at these charts. If we are seeing now growth of Nvidia from 2000 and I don't know 20, it's from $8 to 152. Historical growth of Apple has been like business phenomenon because okay, we have only now we have last couple of years, but still this is multi-trillion company, and this multi-trillion company has been going at 20 plus growth rates since 2014. Like it has cost $16 when it already has been one of the world's largest companies to more than 20-fold return. So this is spectacular, right? You know why you shouldn't buy large companies in S&P 500 and just make money. Here's the thing. These are only the winners and these are the best companies. And actually, to buy Nvidia at $9 or to buy even Apple at, I would say, $14, it's not that simple because here are other companies from S&P 500. If you are seeing like this company, I don't know what it does. I simply just Contongo, or if you know this company, just tell me what's doing. But because I just took a random company from S&P 500 which recently had bad returns and simply look at it. Well, it started to trade at 2010 and it's still the flat at, I don't know, 14 years after. And then I took Evilab, no, Eleval Lab, excuse me for my mispronunciation, and it actually went public at late 2023, and now it costs $5. So you see, this more looks like penny stock or meme coin rather than actual stock. But here's my point. What I did, I simply took random companies from the list of Nasdaq and S&P 500 stocks and saw their returns. And these are the returns which we simply don't see because there are no headlines with them. And if we are picking stocks, we have largest probability that we could pick something like this or like this rather than Nvidia. Well, of course, this might be a bad example. Truth might be somewhere between this company and success story like Nvidia if we are choosing our own stocks. But my point is, if we are simply following the news or price movements of certain stock, we are gambling and we are better off not to invest in stocks in regular way because investing in mutual funds or ETFs that follow stocks will be much better choice. So should we invest in stocks? That's the question which we should rephrase. Should we our own pick individual stocks or should we invest in already established products? Because S&P 500 is already established product which simply chooses the best 500 stocks from all the stocks in New York Stock Exchange, not simply 500 random stocks. And that's a huge difference. And that generates return. And actually, if we have some ideas how to actually pick our stocks and trade or invest with them, we have other options. So my point here is simple. Yes, you should invest in stocks, and yes, you can actually be quite successful if you are picking the right stocks and they are growing for specific time periods because, well, all the richest persons in the world are stock investors in one way or another. But it's deadly difficult. So first things first, unless you don't have custom made extremely well tested strategy, don't do it at all and invest in S&P 500 ETFs. But if you have something, some idea and some approach, use and test this approach against realm of ETFs and mutual funds that already has something similar. So, for instance, you might have value investing strategy which will work in North America. So we could simply see North America, we have equity strategy which is created on, let's say, dividends now. Excuse me. And then we could see that we have high dividend yield and energy dividend strategy. And then we could actually create our own portfolio with dividend stocks in American stock exchanges and compare how our performance goes together with these kinds of ETFs. And once we have something like that, and we could objectively see that we are making better returns than specific strategy for specific market approach, only then we might have something. Up until that, well, just simply stick to the safe places, because I don't know how much money has been lost to irrationality and quick short term greed in financial markets. So, before you invest, do your homework. Do not simply pick individual stocks based on headlines. Do your homework and see whether you are performing better than S&P 500, and more importantly, whether your investing strategy is better than that you could find in ETF screeners, because ETF screeners has a lot of good investing strategies. So if this better, then start to invest with that. If not, well, simply invest in ready-made financial products. But if you are interested in personal investment plan yourself, and if you want to understand better how investing works and how it could grow your capital, join my financial educational program, because there you will see best investing approaches and best investing principles for individual investors. So let's meet there and wait for my next video. Bye.